Ladies and gentlemen, my name is Greg McGlosky from ForexLive.com. This is a Forex quick look, taking a look at the sterling versus US dollar, and what a week it was for that currency pair, reaching the lowest levels on record. Let's take a look at some of the technicals, because you might be surprised what it looks like right now. Looking at the monthly chart of the sterling versus US dollar, the year started with the pair near the 135.97 level, and the price low this week reached all the way down to a low of 103.565. That's about a 28% or so decline in the pound versus US dollar. Granted, they probably deserve it. We saw the Bank of England raise rates one day last week, and then we saw the fiscal policy from the new Prime Minister cabinet and administration come in, add or cut taxes, also add some relief for energy for consumers. So on one hand, we had the Bank of England coming in, tightening rates. On the other hand, we had the government doing fiscal policy. Then the Bank of England came in this week and said that they would support the bond market. That sent the yields sharply to the downside, and said that they would put off the quantitative tightening that they were planning on doing till further out, and they could look to raise rates as well to support the pound versus US dollar. So, man, it's up. It's a jumble in that country, and that nevertheless allowed for the pound versus US dollar to base off of what was the lowest level on record at 103.565 and push back to the upside. This is what it looks like on the monthly chart, as mentioned, and the prior lows were back here. We had 2 weeks or 2 months down here where the low came in at 105.20 and then 105.45. Keep those levels in mind. Getting back above those levels helped to give the bias more, or the buyers, some hope for further upside momentum. And indeed, we are closing the week near the 111.60 or so level on the top side, which is a long way from the 103.65 or 56 low that we saw earlier in the week. So from a technical perspective, there is work to do. The 2020 low price came in at the 114.08 level. That's this level right here, 1.14098 level, and getting above that level would be somewhat positive, or additionally positive for the currency pair. But there's going to be other levels in play off of the hourly chart, so I want to focus on that right now. And take a look at the hourly chart. Some key levels here that that give the bias a little bit more bullishness going into the weekend. First off, here's the that swing area, those old swing lows, record swing levels going back to 1985. They came in at 105.20 and 105.45, and on the way to the downside, the market broke through those levels fast and furious all the way down to the low price of 103.53, and then we started to trade back higher, and we traded above and below those levels right here. But I want you to focus on a couple days later. This is on Wednesday's trade, and what do we see? We saw the price move back down to test this 105.20 to 105.45 level, and we saw the rotation back to the upside off of that base. So technically speaking, traders were paying attention to that lows. Risk could be defined and limited. The price started to move back to the upside, and that move to the upside ended up taking the price back above the 100-hour moving average. And then we saw another corrective move to the downside. Admittedly, on Thursday's trade, the price traded above and below the 100-hour moving average here. Markets were deciding, what does it want to do? What does it want to do? Does it want to go back to the downside, test the old lows, or do we base against here and move to the upside? The decision was to base against the level. We saw momentum on this move to the upside, and that gave the buyers the go-ahead to push the price higher. We got above the 38.2% retracement of this move to the downside. That was step one with momentum here. We didn't see the momentum here. We didn't see the momentum follow through here. So seeing this bar move to new highs, getting above this high was positive on Thursday's trade. And then we went above this trend line right here and also above the 200-hour moving average here. And note here that the market based against both those levels here, forcing the price all the way up to the 61.8% retracement of the move down from here. By the way, this base also based against the 50% retracement, so we're getting above the 200-hour moving average, getting above the 50% retracement. That's bullish, and it took another. This is a 110.45, and this is a 112.05. So it's not. This looks like a small move, but it's a pretty decent move to the upside. It's like, I don't know, 150 or so pips to the upside in a very short period of time. So, but we found sellers against 61.8 and the start move down. And in trading here today, on Friday at least, the price did try to get above the next target up here at 61.8, which was also this low right here, and found resistance sellers. And where did we go? We went all the way back down, just below the 50%, but held the 200-hour moving average before rotating back to the upside. So a volatile up and down day on Friday, month end, quarter end, volatile week. Let's get to the weekend type of thing. But from a technical perspective, we're closing above the 200-hour moving average. That's positive for this currency pair, and at least in the short term. And as long as the price can remain above that 200-hour moving average, above the 50% retracement, and work its way above the 61.8% retracement in this level right here, that would be more bullish and send the price back toward this area through here where the price consolidated between 113.50 and go up to the high right here, 117.37. I would expect that we'd see some sellers in this area if the price were to get that high on the first look, but you never know in this currency pair. So the technicals are more positive going into the weekend as long as the price can remain above these levels on the downside. 110.04, 110.45 are support levels, and the underside of the trend line as well is also in play. If we stay above those levels, more bullish. If we move below those levels, look for a rotation back toward the rising 100-hour moving average, and we'll have the market decide what it wants to do at that point. Also, the 38.2% retracement would also be in play. So pay attention to the technicals, folks. They helped out actually in this week's trading for what was a very volatile trade in the sterling versus US dollar. But I'm not surprised because risk can be defined and risk can be limited, and traders like that. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.